An ETF is not good or bad. It is just a wrapper, right? It's a function of what you put in it. And the same way a digital asset treasury is not good or bad. It's just a function of like what is in it and like what do you do with that capital. ETFs are like one of the most democratizing, structures that have in financial services has ever created.
Would you look to explore investing in assets that are tokenized on the Avalanche blockchain potentially?
Yeah, again, tokenization is inevitable.
This episode is brought to you by Uphold, which is a great crypto platform that makes it easy to buy, sell, and stake crypto assets. Uphold has over 300 plus cryptocurrencies, including Bitcoin and all the top altcoins, and they offer a crypto staking on over 19 crypto assets. I've been a user of the platform for many years. They are safe and reliable. They don't commingle or lend out your crypto funds, and they are 100% reserved. You can review their transparency report. Uphold also offers an amazing rewards program where you can earn up to 5.25% on stablecoins. This rewards program also allows you to get 24-hour early access to new tokens that they list. And to participate, you just simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. And the stablecoins that they support includes Ripple's RLUSD. You can earn up to 5% on that stablecoin and 5.25% on USBC. So if you'd like to learn more about Uphold and all the great services they offer, visit the link in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Bart Smith, who is the CEO and chairman of the Avalanche Treasury Co. Bart, great to have you.
Thanks, Tony. Looking forward to it.
Yeah, Bart, excited to talk about what you're doing in building an Avax Treasury strategy. I'm an Avax token holder, so I'm excited to get into the details. But let's kick it off with your background. Tell us about where you're from and your professional background.
I've been in finance for 25 or 30 years almost at this point. Worked in asset management and I worked at UBS for a while. I was one of the original founders of an ETF firm that was eventually sold to Columbia Funds, and then from there I went to work at Susquehanna. I was at Susquehanna for 13 years collectively. Most of the time there, I ran the ETF group. I was also responsible at times for some international sales and trading stuff. I ran our credit trading business, and then since 2014, I was responsible for anything that was digital asset related. And then, kind of in 2022, kind of given the regulatory environment, we made the decision to create Susquehanna Crypto. Which was not part of the Susquehanna group of companies. It was a separate entity outside of the Susquehanna group. It was based in the Bahamas and with offices in London and Hong Kong, which, we were a derivative trading shop, proprietary shop, market maker, and we did a fair amount of investing into the ecosystem and a lot of DeFi. So a pretty well-rounded business there, and then departed in late August, after 13 great years there, to lead this new digital asset treasury.
That's incredible. You got a pretty strong pedigree. You mentioned 2014, you were looking at digital assets. What was your first encounter with Bitcoin and crypto, and when did it click for you?
Well, yeah, it was only one, right?
Yeah.
2014. So, effectively, we were just interested in the concept of Bitcoin, and we were just we were basically just like investing in Bitcoin long. There wasn't really much more to do there. As in the ICO boom in the 2017 timeframe, we became very active in a limited number of tokens where we were quite sure that the SEC was going to name certain commodities as commodities and not name them as securities. And so we kind of limit our approach mostly to those names: Litecoin, Bitcoin Cash, Ethereum Classic, stuff like that. And then kind of as there was that ICO correction in 2018, we went to try to kind of expand and kind of set up like a proper OTC desk. And, we just really couldn't get terribly comfortable with kind of the legal and regulatory advice that we were getting and others were getting. And so, we kind of were very interested in the space. We made a lot of direct investments over that time, but kind of there was a period there for a while where we weren't as active as maybe some of the other kind of bigger U.S. market making firms. And then kind of the 2021 kind of run up, and that's when we kind of made the decision that if we want to do this, and Susquehanna and my personal kind of view of the world is taking a very conservative approach towards legal and regulatory compliance, and that just meant doing it offshore. And we knew that people were doing it in the U.S. and they were using VPNs, and which really just means they are they're not abiding by their terms of service, but it's but just in a broader sense, if we were going to do this, we wanted to do it in the most compliant and effective manner, which meant, unfortunately, in that time frame, going offshore. And that's what we did. We set up a global business that was in 3 time zones, but just not, in the US.
Bart, things have changed so much drastically since 2014. We went from being taboo and the stigma of this being used by criminals to this full-blown asset class that now Wall Street firms are jumping all in. They're going neck deep, adopting, launching crypto trading, custody, tokenizing, stablecoins, and much more. Plus, we have some legislation like the Genius Act. What is it like looking back and seeing the growth?
It felt really bleak for a while there.
Yeah.
And while there has been a tremendous amount of progress in the last 12 months, Clarity, Genius Act, and we're not through the woods on that. I not to take a somewhat more bearish view than many people, but there's still a lot of work that needs to be done, and we need to codify Clarity, right? Because if you don't create laws that and rules to follow that are very clear, well, then you're just subject to the same kind of regulatory arbitrage that has existed historically. So that's something that in 2025 we need to kind of close out. It's kind of difficult right now with the government being shut down.
Yeah.
So those are things that I'm looking at. And then what you're going to need to have some sort of harmonization of regulatory rulemaking around the globe, right? And you've seen a little bit of things to be excited about. The U.S. is working with the FCA in London, which has always been a fairly difficult and slow-moving regulator, to maybe harmonize some of their rulemaking. But then you have all these other money centers. You're going to have, you have MICA for broad EU. You have, a lot of people going to UAE. And then you have all the money centers, in the Far East, right? So you have Singapore, Hong Kong, Seoul, Tokyo. So there's a lot of things for global firms, particularly global banks, to make sure that they are harmonizing the rules so that they can run businesses globally, and they don't have to have a different set of rules and a different set of groups and groups that can't really function, globally, because there's different rules and regs in each locale. So I think we've made a lot of progress. I think institutions are very interested. What we haven't solved for is kind of this, banks being able to be kind of prime brokers for liquidity providers and market makers in the space. I think that, the events from a couple weeks ago, that was a function of that. That just there isn't enough capital that's fungible and where you can arbitrage price differences in different platforms and in different areas. So that stuff, it still needs to happen. But from where we were 12 months ago, yeah, it's we're light years. So that part's good, but we still have a lot of work to do.
Yeah, it's a great point, because I've been hearing some folks are, for example, not happy with the EU and the MiCA regulations there, and there's some departures. But then you have the United States getting ready to pass the Clarity Act once the government opens up. But to your point, how does this all mesh together, and with these big jurisdictions? So, like you said, there's work to be done here.
Correct. Yes, I agree.
All right, let's talk about Avalanche Treasury Co. Give us the full rundown, the history, the mission, and much more.
So in my previous firm, we were looking at a lot of these digital asset treasuries, and there's some are good, some are were less attractive to us. We were very interested in different structures, right? There's a lot of firms that are just taking kind of a existing opco and they just do a pipe into it, and oftentimes that company that's pivoting from a failed strategy, whether it's gaming or betting or it's a hemp manufacturer. There's there are the different medical failed companies. And so in my opinion, those are more problematic, right? They have historical problems you have to address. They're operating companies, they're regulated. So you have to kind of continue to run these often failed businesses while the primary business is completely unrelated. And to me, that was always kind of difficult. And so when the concept of a Avalanche digital asset treasury came along, People reached out to us because in the last round of Avalanche raised money, we were one of the largest participants in that race. So there, people knew that we were constructive on Avalanche. I was personally constructive. And then as we, it was kind of in the early stage of thinking about what that might look like, I had some very strong opinions about, what would lead to success and what, the next generation of these dApps are going to look like. And the more that I was thinking about it, the more I thought, this might be a unique opportunity to do something different. And, there's going to be a lot of these digital asset treasuries. And I think just like in every other part of the capital markets, you're going to have winners and losers. And, if you built one that was, purpose built to provide, exposure to the Avalanche ecosystem, but you could go beyond, what you might be able to get by just owning the underlying spot commodity or an ETF. Like, I think there's unique opportunities that this type of structure provides. And so the more, I thought about it, the more excited I got. And, ultimately I ended up here.
Mm. And there's going to be the question that folks have is, well, why not Bitcoin? Why not ETH? Why not Solana? Why Avax or Avalanche?
So I do think that one of the benefits of the regulatory clarity that we've had and the excitement they have around it is that, like, finally institutions, governments, are going to be able to implement blockchain technology to make their businesses better, right? And so at its core, blockchain technology is software. And so now if you say, okay, well, how are businesses going to implement blockchain technology? I do feel like Avalanche has a very strategic advantage in like a kind of government and business vertical. It's not the Mag 1, right? It's the Mag 7. So like throughout the last couple of decades, there have been many winners in technology, particularly software, that had different approaches. And so, you had, telecom, you have internet, you had SaaS, you had all these different areas where you could have a winner or multiple winners. I think as people look to implement blockchain technology into businesses, one of the difficulties they have is that businesses don't want to take their private information or the customer's private information and put it on a public blockchain. It's just like, it's not starter, right? So, what a lot of people have done is maybe looked at like Ethereum and building, kind of an L2. Like the unique structure of the Avalanche chain is that they have this kind of 3-chain approach. And one of them, the C chain, allows people to build their own L1s kind of out of the box, in a way that's supported by this broader network. And, you don't need to have like an army of software developers to develop that. So you've seen companies like Robinhood or Google. They're going to build their own. They're going to build their own chains, which makes total sense because they want to implement KYC and AML. They don't want to put their customers, private information on public blockchain. But most importantly, like they want to own the entire financial stack, right? Like they want to be able to customize it. And so, but then at the end, they want this kind of base layer, security. And like that's where you've seen Ethereum have success, right? There's all these L2s that are building on top of Ethereum, and they're basically just paying for Ethereum level 1, security.
Yeah.
And so for me, just looking at all of the companies that have already been building on Avalanche because they have the capacity to customize an L1, but then into the security of the Avalanche chain, which is also EVM compatible, so you can connect out to the rest of the world. Like KKR, Apollo, Toyota, FIFA, like big brand names are utilizing Avalanche today to build for a myriad of reasons. Avalanche team has really built in Japan and in Korea and other parts. Like they're kind of market leaders in a lot of these spaces. And, I just don't think people really understand how differentiated Avax and Avalanche is. So like when I'm looking at kind of an opportunity, it's you have all of this stuff here, and really you just need to be able to package it and market it in a way that people can understand the opportunity. And like, what a better way to do that than to create a regulated public company that's audited, that you can go out and basically reboot, the marketing, in partnership with all of the people from the ecosystem to kind of make people aware of like what's going on in Avalanche and why they might want to own a little bit of exposure to the ecosystem in their investment portfolio.
Yeah, that absolutely makes sense. And obviously, I'm an AVAX token holder, so I'm very much aware of all the
I don't mind the bias. I don't mind the
Yeah.
bias. It's okay.
Yeah, but I wanted to make sure that question was answered for people who don't hold AVAX or they don't know much about Avalanche. So I think it's important to outline that, which you did. So, you mentioned that this is not only about holding AVAX, but also participating in the ecosystem. Let's double click a bit into that. Like what are some of the initiatives you'll be doing as far as supporting the ecosystem?
Right. So, we're going to take a lot of keys from the regulators, right? So there's been a wave of these digital asset treasuries, and so we're as we're going through our own S4, and our goal is in the first quarter of 2026 to successfully merge with Mountain Lake Acquisition Corp. Will be a listed company. There's a lot of things that we can do, and that I believe we're going to be able to do, but we have to also just kind of go through this process and make sure that everything that we're doing is aligned with the SEC and other regulators. So I think that's an important point that that we are going to continually evaluate that. So let's putting that aside.
Mhm.
There's a lot of things that happen in an ecosystem that have value that doesn't fully or majority kind of accrue down to the token. So if you think about Ethereum, right, which is the largest non-Bitcoin blockchain, and I always have kind of thought like Bitcoin is digital gold, right? It's over here, and there's a world where people might build applications on Bitcoin, but it feels like we're pretty far away from that.
Yeah.
So excluding that, in Ethereum, you've had it's the largest blockchain, it's the oldest. And there are a lot of applications that have built on top of Avalanche, right? Aave, right, is worth $4 billion. It's one of the largest, if not the largest, lending protocol. You have like Uniswap, right, which is a trading platform, DEX, that it's on top of, built primarily on top of Ethereum. That's worth like $4 billion. A lot of the value of those companies doesn't go down to the Ethereum network. Some does, but like it wasn't as if you owned, Uniswap, or if you owned Aave, you got a different kind of return than would trickle down to Ethereum. The value of fully diluted value of Ethereum, give or take, rounding broadly, is probably like $500 billion, right? A lot of the excitement around Ethereum is stablecoin usage, right? And Tether is the biggest stablecoin in the world. Tether's worth $500 billion, right? So like Tether being, and some of that accrues down to Tron, because there's a lot of Tether on Tron. So like some value accrued down to Ethereum from Tether, but like how much, and like how much accrued from Aave, and how much accrued from all of these other platforms out there, the Uniswaps of the world. So like there's definitely a network effect that will happen that will accrue more value. So if you're looking to get exposure to implementation and growth of the Avalanche ecosystem, you can own AVAX, and like that should work to some degree. But all of these L1s that are being built on top of Avalanche, where you have these kind of private companies or governments or different, kind of news like builders that are building applications on top of Avalanche, some of that will accrue down because there will be a network effect. But if you could get a little piece, or you could invest in, some of those companies, that probably gives you a much better exposure to the growth of the ecosystem. So, we're going to own AVAX, we're going to stake it. Historically, very conservatively, that's gotten, mid single digits to like high single digit kind of yield returns from taking the AVAX and using it to secure the blockchain. So we can do that. There's other things that we would love to be able to do. Can we, buy a validator and run our own nodes? Could we lend our AVAX to builders and applications and L1s that are building on Avalanche, right? And can we work with them to help them kind of with their staking, with the AVAX they need? Can we work with them to make their businesses better? Can we do, DeFi activities in the space? There are derivatives, obviously, coming from Susquehanna, like there's a lot of derivative activity that you could do with options and future strategies that can generate diversified and maybe in some cases higher levels of income. So what you end up getting is, this diversified pool of exposures that should do better if the ecosystem does really well than if you just owned the token itself. So like, that is the thesis that we're going after,
Sure.
is that we can provide a much better kind of holistic exposure for value accrual for individuals in a way that is the access they want. right? Like many high net worth individuals and institutions, like they're either can't or do not want to buy, spot commodities, digital asset commodities on unregulated exchanges. That's just not how they want to interact. So if I can create, a public company where people can invest through convertible bonds or through preferreds or through straight equity, and they can hold it in their brokerage account, and they can invest in it just like they invest in everything else. And then you have this exposure where we can take, that capital, and then we can put that into the enterprise that is Avalanche. And you would imagine that capital coming in should provide, more, gas for the fire, so to speak, right? You're gonna help to implement more capital into the ecosystem, which should, you would hope, help the ecosystem grow. So that's kind of like the dual nature, right? So like you allow regulated exposure for people in a way that they want to invest, and then you take that capital and you invest it into the ecosystem, which you would hope benefits the growth and is mutually beneficial for the whole, for both parties. So that's the concept, as I think about it.
And then for the staking rewards and the DeFi yield and so forth, will that be potentially paid out in dividends or reinvested?
Again, we haven't gotten that far in the strategy. I mean, I think that, dividends and paying out dividends is something that, companies do when they're kind of in a later stage of growth, right? So like typically when you have kind of, growth companies, particularly like, high growth companies, like the best use of that capital is to continue to reinvest it because your kind of expected rate of returns are going to be higher. So my guess is that the best use of, whatever capital we have would be to continue to try to find the best returns. But like, sure, if there are certain situations where, it would make sense to pay out a dividend or a special dividend. But yeah, I think, right now we're, like I said before, we're going to kind of take the cues from the SEC and make sure that we're disclosing risks, and we're setting this up in a way that's compliant. And then, yeah, well, as a lot of just crypto in general is like not being overly prescriptive,
Hmm.
and just kind of taking what the market gives you. And so, Lane Littman is my COO, who he was the president of Hidden Road and spent many years, working at Virtu and Goldman and a bunch of banks. Like we've seen a lot of iterations of this. And so, what we're going to do is we have a strategy. We're going to communicate, owning and staking AVAX is going to be a very large portion of it. And then to the extent that we can have other additive sleeves of our strategy that are smaller, but we believe would offer a diversified, better exposure and, hopefully provide kind of risk adjusted, good rates of returns for investors. Like that's the plan.
Oh, for sure. And then as far as your AUM, I read that you're looking to buy $1 billion of AVAX tokens. Is that right?
I mean, yeah. Ultimately, we closed a private placement, and then we have this, pending business combination with Mountain Lake Acquisition Corp. At that point, depending what the market does, that's going to be somewhere in the mid hundreds of millions, if not higher. But yes, the idea is to as Avalanche continues to grow, is to continue to try to seek out capital, again, in ways that people want to invest in the market,
Mhm.
to help inject more capital into the space. The thing that's interesting to me is that, and if over time, sometimes you'll hear me say this over and over, like every other industry was allowed to grow this way. Software, SaaS, telecom, internet. You created a public company and you raised money through debt or through converts or through equity, and you took that money and you invested in the enterprise. If the enterprise did well, bondholders and equity holders did well. And this industry was specifically not allowed to do that. And so this digital asset treasury structure allows for that to happen, right? You have a public company and you can raise money in the public markets in a variety of ways. And that could be issuing equities, but there's other things that you can do that might be attractive to both a different type of investor and might be more attractive in trying to generate more AVAX per share for our shareholders. And so that to me is what I find most exciting about this structure. And then obviously, because it's not a mutual fund or an ETF, like you don't have to prepare yourself for the possibility of deploying money on any given day that you weren't prepared for, or having to redeem money, right? So if you're open to a mutual fund redemption or an ETF redemption and having any given day, that's very limiting in what you can do to provide exposure to, your investors. Because in theory, you hope this doesn't happen, but on some given day, everybody could come and rush to want to redeem. And so
Yeah.
you need to be able to meet those redemptions. And that is very limiting in what you can do to try to maximize a longer term strategy. So yeah, I think that in the evolution of kind of these digital asset treasuries, I think that's the most compelling argument that people will come to realize of, like, this is just a better structure to invest in what is still, in my opinion, a very early emerging technology.
So on that note of it being early emerging technology, I wanted to get your take on this trend and how long you think it lasts. Where this asset class grows and there's maybe less volatility, but there is the staking and the, DeFi component where you can do a lot more with the asset, right? Um, but let's say a bear market or a market downturn rolls around. How are you preparing for that? And do you see other DATs failing? Maybe some consolidation and things like that.
Yeah, I mean, I can't speak to how other people are thinking about it, but like the thing that I found most surprising about that sell off, whatever at this point it was, like 3 Fridays ago, was how surprised that people were, right? Like like these asset classes are very volatile, because they're early stage. All good new ideas are volatile, right? And so, you have to have the expectation that when volatility or when a sell off happens, like, you need to be prepared that that could be a pretty meaningful sell off, and it could last for a long time.
Mm.
My first job out of college, I worked at Paine Webber, which was later acquired by UBS, and the market was at the very end of the internet.com bubble, and so for the first like 4 or 5, 6 months I worked there, the market just went up, right? And then it went down for 3 years. So, 2000, 2001, 2002, all negative years for the S&P 500. So that was like a very formative experience for me. So like you have to, we're thinking about this vehicle as a long-term vehicle, but like the idea here is not to try to take incremental risk that is unwarranted. The idea is to take a long-term approach that is prudent, that provides kind of the best exposure you can for your shareholders. And so as we're thinking about in this strategy going forward, you always in the back of your mind have to keep thinking like, well, like if you have this massive, people are coming into the space because they think they have a 1, 2, 3, 5x. I don't have any forecasts of where the market capitalization is going to go, but it's like if you're buying this is because you think that there's an opportunity for you to go meaningfully higher, like that. There's no free lunch, right? Like that's going to come with periods of doubt and periods of fear. And that's when you're going to have, market sell-offs. And the best thing that you can do is to position yourself to benefit from those moments and not to be the person who's being harmed by those moments. So, I think that will be a key component of how we think about it. And then, yeah, like you said, there's all of these digital asset treasuries out there. They're going to have to distinguish themselves, right? They're going to have to capture mind share from people, and they're going to have to be able to communicate like an effective strategy and then deliver on that. So like the capital markets, if nothing, are very efficient. And so over time, I think you will see kind of winners and losers that kind of show up over time. And I think that we're excited about our ability to navigate that.
Yeah, for sure. And yeah, I'm just curious to see how things play out. And I believe in the digital asset treasuries, of course, and I think it's a great approach, great a hybrid approach of crypto and the TradFi world, and allowing folks to get exposure. But I guess as with all things in the free market, you're going to have companies that are well run and some that are poorly run, and the chips are going to fall where they fall when the volatility hits or the bear market. So we'll have to wait and see.
Yeah, I mean, I think that was part of the reason why we went the route we did, which is to kind of set up a purpose-built company from scratch,
Sure.
right? So, when you look at the company, it's called the Avalanche Treasury Company, right? Like there is no doubt in kind of what we're doing. Our sole focus is going to be on delivering kind of value to customers and shareholders in a way that we feel like can better represent the growth of the ecosystem. And I think that we like there's gonna. It's not like I'm not worried about an alternative investment per se. It's just like there's a whole world of investments. Like they don't need to own crypto at all, right? They don't need to own blockchain technology. So can we effectively communicate a value proposition of owning, this asset versus any other asset? And I think if you're listed, on a public stock exchange in the US, you are now competing against basically every other asset in the world. And so I think that that's what we're focused on, is providing, a structure and a company and an exposure that people are interested in, and then being able to communicate that effectively.
Yeah, absolutely. And then on the communication of communicating that effectively, you have ETFs out there, right? There's going to be AVAX, spot ETFs, and so forth. So I'm curious, how would you, what would be your elevator pitch to say, hey, this that is better than just buying an ETF?
Well, what's funny is that treasuries, as like every kind of anytime there's like a new vehicle or something that's in favor, there's a lot of criticism that comes with that. And back in like the 2008 timeframe, 2007, 2008, there was a ton of criticism about ETFs. The ETFs provided like a systematic risk, and that the creation redemption, mechanism was going to fail under like a massive amount of like market duress, and that that ETFs were creating it impossible for small and mid capitalization companies to seek capital and differentiate, because people were just buying the index. And there was a lot of FUD around ETFs and how it was this really risky, dangerous, unproven structure. And now here we are, fast forward to 2025, and people are saying, "Oh, these digital asset treasuries, have all of these shortcomings. You should be putting it into an ETF." Right. And so it's just funny how like things evolve over time as people become familiar with structures. An ETF is not good or bad. It is just a wrapper, right? It's a function of what you put in it. And the same way a digital asset treasury is not good or bad. It's just a function of like what is in it, and like what do you do with that capital.
Mhm.
ETFs are like one of the most democratizing, structures that have in financial services has ever created, right? It allowed people to get exposure to gold, and to a whole host of things that an average small, institution or high net worth investor didn't have access to. And so if people want to use ETF to get exposure to AVAX or any other crypto, like that is net positive, and I'm very supportive of that. I would argue, to the points I made earlier, that just owning the AVAX token itself and then staking that for whatever amount that they're going to be able to stake, given the fact that they're going to have to respond to daily creation redemption requests, and then the ability to trade that asset and keep that in line, every day in the marketplace. Like it could be an expensive proposition. I think by and large, market makers in the competitive marketplace will figure it out, but it's not totally clear to me how efficient a vehicle you're going to have for, AVAX or some of the other tokens that aren't Bitcoin and aren't Ethereum, right? And so, to me, I think that there's, we've seen these digital asset treasury structures over, the last couple of years, and so there's like, I think in my mind, there's probably more certainty from my position of what that looks like day to day, and less so in all of these new ETFs that are coming out. Like managing that asset day to day and having market makers keep that price in line with spot, like could be problematic. And then again, you're just kind of, because you have to have daily redemption and creation requests, like you're just going to be very limited to owning the spot market. And so
Sure.
our hope is that for people who would like to get, a different exposure, and maybe something that I would think would be hopefully more of a true exposure of the growth of the ecosystem. I think you put those two things side by side, and I feel very good about the value proposition that we put forth. And for a lot of people, that might just seem too complicated, and they can buy the ETF, and that's fine, right? I don't know over time if that will get them what they're looking for, but I certainly understand why people would want to own it. And people in general buying AVAX is good for the ecosystem, and we're obviously very supportive of it. So like I spent a lot of time in that industry. And like a lot of my friends are still working at all of these firms. Bitwise are three guys that I've known for over a decade, if not longer.
Mm.
And so Bitwise is gonna launch an AVAX ETF, and if you want to buy an AVAX ETF, you should buy the Bitwise ETF or any of these other companies that are listing them. So yeah, I think we're focused, like I said, on putting our strategy together and putting forth the best strategy we can, and then making sure we're doing it in a prudent way that gives people the best exposure. And there's going to be a lot of other investment opportunities beyond crypto that we're also competing for mind share. And so in reality, I'm probably more thoughtful about how do we distinguish the opportunity versus like the field versus a comparable passive exposure, or owning spot on Coinbase or Robinhood or something like that.
Yeah, that definitely makes sense. I'm curious. You probably can't talk about it, but you mentioned other investments. I'm assuming that's under wraps right now.
Right. Yeah. I mean, again, we're still going through kind of the registration process, and so we will be in communication with the regulators about what we'd be interested to do. The wonderful thing about the SEC and Edgar is all these filings are public, so we also get the benefit of people who started before us. And so every time there's another filing, an updated regulatory kind of response to another one of these digital asset treasuries, it's just an opportunity for us to kind of glean what is what is in the gray area and what is not. And then like I said, like we're going to take a very conservative approach toward regulatory and legal compliance, and we're not going to go anywhere near gray areas. I feel pretty confident that the from what I'm seeing in the market to date, like these structures um, won't be very limited. That as long as you're disclosing and you are doing all the things that you're supposed to be doing, from that perspective, that you should have the ability to do what every other corporate treasury in America has been able to do. And I think sometimes people act like these are new vehicles, right? Like Berkshire Hathaway and Apple and Microsoft are like the largest corporate treasuries in the world. They just have this massive operating business
Yeah.
alongside of it. But Berkshire Hathaway doesn't. Berkshire Hathaway just buys companies and they invest in other companies, and then they have this huge pile of cash that they use. So like the concept of a corporate treasury and corporate treasury management is not new. It's just it was taken and kind of implemented by Michael Saylor at MicroStrategies, and the benefits from being able to use that capital structure to invest with a whole slew of people who to date have not been able to access this asset class the way that they wanted to. And I think everyone said, wow, that's a great evolution of something that already existed. I would like to apply that to this ecosystem and see if I can provide a better return or a better exposure for investors. And so that's kind of how we ended up here today.
By the way, that's a great example that you gave with Berkshire Hathaway and Apple, because of, to your point, of their corporate treasury, right? It's loads of cash they're sitting on. So that's a great example. With regards to your timeline and roadmap, what are you expecting for the remainder of the end of this year, excuse me, and then going into 2026?
So the next step for us is obviously to our registration and this business combination with MLAC that we are we're working through, and the hope is that that would be effective or close in the first quarter of 2026. We obviously need the government to open for that to happen, and so I don't expect at this point in time to have to adjust that timeline, but we are subject to the things that are out of our control. And so once once that business combination, hopefully gets approved and closes, and then the strategy will go from there. And at that point, we have, like I said, this permanent capital vehicle where our investment time frame is just way longer, right? And so we're looking at the opportunities that are in there that could supplement just owning Avax and staking it, which again is going to be, a large portion of what we're doing. I just want to, I don't want anyone to think that this is going to be like, a venture fund, right? The idea is to have it at its core, is trying to return more Avax per share for, our shareholders. And then if we could have sleeves that are diversifying or accretive or provide different exposures, that I think that is going to be the differentiator. I look at it kind of in a two-step process. Like we need to meet the obligations of our regulator and hopefully have this close. That requires the government to reopen. And then beyond that, I think then we're taking this kind of longer view. Okay, how do we represent the opportunity set that this ecosystem provides, in this vehicle?
Something that came to mind as you were talking about, you're making those statements. We've seen a massive race kicking off for the tokenization market, where a lot of firms are looking to put stocks and different assets, money market funds, and so forth on the blockchain. Would you look to explore investing in assets that are tokenized on the Avalanche blockchain potentially?
Yeah, again, that's something that's been, a big point of discussion over recent weeks and months, particularly as in the digital asset treasury world. Um, I think that there is a lot of discussions about like, what is a security and what is not a security. And so, if you do it on an L2, is it actually security because it's not really decentralized? Versus if you do it, in a broader ecosystem, you can demonstrate sufficient decentralization, and that would meet different rules for the SEC. Like,
Mhm.
I think tokenization is inevitable, and so having worked in traditional finance for the bulk of my career, like even today, it is insane to me how manual stock trading is, right? And so I think that there are certain parts about um, blockchain, moving things on blockchains that requires like a very specific set of skills and make sure like you're being very diligent at how you manage things on chain. Because in the traditional finance world, if you send Google to the wrong, you know, broker dealer, like you're getting that back, right? Like they will reverse that back. And so I, the thing to me that is shocking is that how dated the infrastructure is in traditional equities, globally, and like just how much inefficiency there is there. And so I think just from like a basic like just modernization of the underlying structure and plumbing of traditional finance, like bond trading and equities, it's really just like this cobbled together kind of plumbing that's existed for over 100 years. And like you have this opportunity to like start clean and like start, if you were going to build the best way for people to exchange value, over a blockchain, like I think that is a tremendous opportunity. And Avalanche, the community has been focused on tokenization, from the outset. That was kind of the core motivation of launching this chain. So yeah, I think that kind of antiquated plumbing mixed with like people want 24/7 everything. And so, in many cases, we are limited to the trading hours that we have in all of these different old money centers because of this plumbing. Right. And so, as people are going to demand a higher layer level of access and liquidity, it just seems inevitable that it goes to tokenization.
Absolutely. Something I forgot to ask you earlier, as far as the purchasing of these tokens and the custody of them, which institution or platform are you going to be using?
So we're going to be using a myriad of different solutions. At this point, everything we're using is a qualified custodian. In crypto, we don't talk too much about custody. What I would say is like we are expecting that the regulators in the U.S. are going to demand a very regulated solution, and so our strategy has been to utilize that as such. So everything we're using now are qualified custodians, and I would imagine over time, if we were to deviate from that, it would come after a pretty exhaustive set of conversations with our regulators.
Oh, for sure. Bart, great stuff. Looking forward to the future updates around the Avalanche Treasury Co. But thank you so much for joining me. I got some wrap up questions here for you. First, if you could create your own metaverse, what would the theme be?
Oh boy. I'm like a big sports fan, and so I have like a college sports team, and I have professional sports teams in the U.S. My son is a big Liverpool fan, and so what you're seeing, and particularly on Avalanche right now, one of the areas of growth. In Avalanche has been, the FIFA World Cup in 2026. They're trying to build ticketing solutions and fan engagement on top of Avalanche right now, so that you have this situation where, you go to sell a ticket and some bot buys it up, and it's a broker, and they post out 200 or 300% above the price they paid.
Yep.
Well, the consumer's paying this excess price, right? And so blockchain technology where you can obscure private customer information, but you can still verify that that person is like a verified purchaser and user of the ticket. That's one technology that Avalanche is implementing with FIFA. And then fan engagement, tokenizing your rewards, or right now they have there's a partnership they have with the LSU football team. And so if you go and you're using your card, and you can like get points that accrue for like a Tiger token, they call it a Go token. You can spend that on memorabilia, or like a team T-shirt or something like that. So like if you could go into a metaverse where you combine the ability to purchase ticketing, right, in a safe place where you're buying the actual ticket from someone that's verified, and then you're also accruing all of these other tokens that you can use kind of in a metaverse to purchase memorabilia or other kind of fan things. And you have this like world where I could go from like one team to another in a different sport, in a different league. That to me would be like a pretty cool start. So there's probably people out there who could come up with something a little bit more imaginative than that, but just being able to kind of go into one kind of metaverse where I'm surrounded by all the sports teams, and I can engage in them in a different way. I can purchase tickets, I can purchase memorabilia in a safe way. That to me would be pretty cool.
Yeah, as a sports fan myself, I would love that. So I'm all for that. Rapid fire questions. Favorite food?
Steak.
Favorite musician or band?
Over time, I'm a little older than a lot of people in crypto. I'm still a pretty big U2 fan.
Oh yeah. Favorite movie?
Favorite movie, Shawshank or Good Will Hunting. I'll go Shawshank.
Yeah, Shawshank's great. Favorite book?
Oh, there was a great book that I was given when I first came into working in finance, and it was a book that was called Never Eat Alone. And it's a lesson that I've learned over the years of like when people come in and they work really hard, and they kind of like wake up 30 years later, and they've wasted all this time. And so that nothing is replaced by interpersonal kind of relationships. And so it's taught me like a lesson over time to like the interactions you get from just sitting down and having a meal with someone, just kind of provides like a wealth of different benefits. And so that was a book that I learned on, that I learned from very early on in my career.
And when you're not working, what are you doing for fun?
I don't. I'm working a lot. I spend time with my kids. I have my kids' sports, and that takes up a lot of my time. If I'm going to get out and do a little leisure, like I'd like to be on the water. So like being out on a boat is great, or the few times where I can get a 4 or 5 hour window, maybe I can squeeze in around a golf. But in general, when I have some free time, I just kind of want to be out in a nice kind of stream place. So a lot of times that's kind of on a boat.
Awesome. Bart, pleasure chatting with you. Looking forward to the future updates. Thank you so much for joining me.
All right, Tony, congrats on being an AVAX holder.
Yeah, for sure.
All right.